Let's take a look at some business news now. And oil prices creeped up on Monday, shaking off fears last week that the US economy is headed for a recession. A strong jobs report on Friday did much to calm the nerves of markets, even as part of the US banking sector continues to show signs of fragility. Investors will be watching out for more economic indicators set to be released on Wednesday. Investors have been sensitive to Federal Reserve interest rate hikes, with the US central bank raising rates by another 25 basis points last week. Let's get more on this now with Han Tan, who joins us from Abu Dhabi. He's Chief Market Analyst at Xinity. Good to have you back with us, Han. Let's start with interest rates. We saw the Fed continue to hike them last week. How much more might they be tightening monetary policy, do you think?
Well, if you look at market forecasts, they expect the Fed to be done. So they are pricing in a pause through the summer with a potential rate cut by the Fed actually now expected as early as September. So the narrative has changed to one whereby peak US interest rates are here, and the Fed could then pivot towards a more accommodative stance before 2023 is over.
Yes, and when we look at the US, the world's biggest economy, we're continuing to get some strong and promising economic indicators. That jobs report last week was the latest one. Of course, there was this big fear that perhaps the US and other countries around the world were headed for a recession. How do the markets feel about that? Are we out of the woods?
The short answer is no, we're not out of the woods yet. The very fact that policymakers at the Fed were leaving the door open, so to speak, to a pause, shows that perhaps they're seeing enough signs or expect enough demand destruction to feed through into the US economy, given that they have already hiked by 500 basis points, right? Now, while you're right to point out, perhaps in US stock markets, they seem to be shrugging off those recession risks. I think in other segments of the markets, like bonds, for example, or even credit default swaps, they are very much aware of the potential recession risks. And if those risks crystallize, I think that should also drag down oil prices as well.
Okay, Han Tan, thanks so much for updating us there from Abu Dhabi.
Thanks for having me.
Now to other top business stories from around the world. Saudi Arabia's economy has cooled in the first quarter as the oil sector grew at its lowest rate in more than a year. GDP expanded an annualized 3.9% in the first 3 months of the year, down from 5.5% in the previous quarter. The International Monetary Fund has warned that the kingdom won't be able to balance its budget this year if oil prices stay below $80 a barrel. Turkey's Istanbul airport has remained the busiest air hub in Europe last month, according to the European Organization for the Safety of Air Navigation. The airport handled 1,446 daily arrivals and departures, followed by Amsterdam's Schiphol and London's Heathrow. The report also shows that air traffic throughout Europe still hasn't fully recovered to pre-pandemic levels. And Warren Buffett's Berkshire Hathaway has posted a $35.5 billion profit in the first quarter of this year. Berkshire reported higher income from insurance-based investments, as well as gains from common stocks such as Apple. Buffett's firm has also repurchased $4.4 billion worth of its own stock in the same quarter.